What are intangible assets? Well, the word intangible means that it does not have physical substance. You cannot touch it, you cannot feel it, okay? But these assets, they're used in our operations, and they provide rights and privileges that help us in our operations, okay? Now let's take a list of these, and we're going to kind of talk through these in turn. These will make more sense. But you can see the different examples of intangible assets. Some of these words you've heard before, right? Patents and copyrights and trademarks and that sort of thing, right? Let's talk about those. What is a patent? A patent is the exclusive right granted to manufacture and sell an item for a period of time, okay? And we do that, like Kyle, let's say you invented something. Took you 3 years to invent it. Now you're going to reap the benefits because you're going to sell it, okay? Well, if there wasn't some sort of patent protection legally, then somebody like Tanner could just take your idea and start selling it, right? Okay? And we want incentives for people to invent things. So a patent is that protection to the owner for an amount of time to be able to do that. Does this make sense? Okay? So let's take a look at an example of how we're going to account for this over the life of the patent. You can come off that. Okay, remember how we depreciated plant assets? And remember how natural resources we depleted? Well, with intangible assets, it's the exact same principle. You want to spread the expense out over a reasonable period of time, but we don't call it depreciation, we don't call it depletion, we call it amortization. Amortization. Are you with me? So let's take a look at this. Let's say we purchase a patent for $10,000. Now, we didn't develop it, we purchased it. Okay? Now, the patent is expected to have a useful life of 10 years. Well, let's figure out the amortization. Pretty easy. It's $10,000. There's no salvage or residual value mentioned. And we divide by the estimated useful life of 10 years. We're going to amortize $1,000 each of those years. We don't debit depreciation expense. We don't debit depletion expense. We debit amortization expense. We don't credit accumulated depreciation. We don't credit accumulated depletion. We credit accumulated amortization. That's a contra asset hooked to the asset of intangibles. Okay? You with me? Not too hard there, but that's a patent. What is a copyright? The copyright is an exclusive right to publish and sell a musical, literary, or artistic work during the life of the creator. Come off this. Now, I think this is actually, I think, an interesting area if you have to take a business law class, you'll probably talk about these things. And that's not the purpose of this class, but it's interesting to talk about some of these. But like if you write a song, then you have the copyright on that song. People cannot profit using that song unless you give them permission and or they pay you, right? For example, if we wanted to take a song everybody loves, what's a recent song everybody loves? Tell me a song everybody loves that's out there. What are you kids listening to these days? Any examples? Don't leave me hanging. Huh? Okay, take a Bruno Mars. Have you heard of Bruno Mars?
Yeah.
Let's say JCCC wanted to take a Bruno Mars song and put it as the song that plays during their commercials on TV. No, you can't do that, can you? Now, when you watch my videos, you've watched these videos? They have some really nondescript, somewhat awful music playing at the beginning.
The intro's pretty nice.
Yeah.
I'll skip it.
If you think the intro's bad now, go onto YouTube and look back and listen to what they were and what the songs were in 2011. It was pretty bad. Okay.
Was that the jazz year?
The jazz year.
Jazz year was the best year.
Oh, you like that?
Yeah.
Okay. I thought it sounded like sitcom music.
But
anyway, we have to, because of copyright issues, we have to make sure we have the right to use that music at the beginning of these videos. And if JCCC made commercials, they'd have to have the right to use that music. You with me? Okay. Let's talk about franchises. Let's say you wanted to start a franchise, a Subway franchise, okay? Well, it's quite expensive to start a Subway franchise, isn't it? Okay, and you'd have to pay a pretty big fee. Well, then you have that right to sell Subway sandwiches, and you have that right to purchase the ingredients and the recipes and all that sort of stuff for Subway. And you will benefit from the advertising that they do. The advertising that they do at the corporate level benefits all the franchisees, right? But that is what it costs to. So, okay, let's go on. Let's talk about trademarks. Trademarks, I think, are very interesting. Trademarks, let me give you some examples on the slide. Take a look at these. Okay. Now, see this little font for Lego? Haven't you seen that before? Right? It's the red background with JCCC or with LEGO. If JCCC tried to make that their logo and they put JCCC in there, we would be in big trouble because that is a trademarked font for Lego. Okay, make sense? Same thing with, here is like a jingle or a phrase. This is one of the most, were you guys alive when Just Do It was a big Nike? Okay, that's one of the most famous advertising jingles or phrases that there is. It was a very good ad campaign. Well, if JCCC tried to say, you know, come back to college, just do it, we'd be in big trouble. Okay, McDonald's. See that big M? That is a trademark. You cannot use that M. So even if your last name's right, you have an M last name, what? Monson. So if you wanted to start a restaurant and call it Monson's Burgers, and you use that big M, Tony, you'd be in big trouble. Okay, so that gives you an example. We're not going to talk about goodwill in this class. That was one of the things that were listed, but goodwill is a very complicated concept that's beyond the scope of this class. But that's intangible assets. Are you with me?